Welcome, and thank you for tuning in to the Sean Inspires podcast. We have a new episode. I have an amazing guest who's joining us today here in Atlanta, Georgia. His name is Rush Imhotep, and he is a financial advisor at Northwestern Mutual. So I'm going to go ahead and give you guys a little bit of background information about Russ, but then I'll have him come and grace the platform in his own words. So I have here Russ. He's a financial advisor with Northwestern Mutual, Godwin Wright, an affiliate of Northwestern Mutual Wealth Management Company. The firm's flagship office is located in Buckhead with additional offices across the state, including Midtown, Peachtree Corners, Alpharetta, Columbus, Tyrone, and Macon. Russ graduated cum laude from Cornell University with a Bachelor of Arts in African Studies and Business Management. At Cornell, he was a member of their Division I football program, where he was elected twice as team captain and earned several accolades, including the National Football Foundation Scholar Athlete Award, the Jack Murphy Big Play Man of the Year Award, and the Mansour Jewelers Most Improved Player Award. Prior to joining Northwestern Mutual, Russ worked in the private lending space, helping business owners and investors secure debt financing for their various projects. Rush is passionate about finance and enjoys helping business owners, financial professionals, and investors solve complex problems with simple solutions. Outside of his practice, Rush enjoys spending time practicing yoga, kickboxing, meditating, and learning more about digital asset space. Great bio, very impressive. So, in your own words, let's just tell the audience a little bit about you. Go right ahead.
I mean, you pretty much hit it all. I would say that the only things that are missing there is just a little bit more about, I guess, my lineage. So, I born in Detroit, Michigan, grew up in Brooklyn, New York. Spent the first kind of call it 22 years of my life freezing my butt off in the Northeast and the Midwest, and then I recently moved to Atlanta. That had been like 2017. And I've warmed up with the exception of this winter. This winter has been a little bit colder than usual, or from what I've experienced. But I mean that you pretty much got it all in there, Sean. So I appreciate the introduction.
Well, you're welcome, and we're glad to have you on the platform. So we're going to talk, guys, just as you're tuning in, make sure you're taking notes. He's going to unload and unpack a lot of financial information with us today. So just tell me what basically sparked your interest in becoming a financial advisor and moving into the finance world, because your background at Cornell was one of business and then sports. So that's a major shift from what you originally went to school for. Oftentimes we do see that in individuals' career path and purpose. So what was your inspiration for becoming a financial advisor?
Yeah, so I initially, and I probably should have included this as well, I initially interned with Northwestern, the firm that I'm with now, in 2015. This was when I was still in undergrad. This was either in either my junior or my senior year. I can never remember. But yeah, I interned there. I got exposed to the business as far as, what we do. A lot of what I was doing in the internship was helping guys out with like life insurance and disability coverage, and helping them think through that part of planning, and networking with other alumni in the city, if you would call it what I was doing, networking. But that's kind of what started it. And then post grad, I actually spent some time playing football. So my first professional football contract was with the Corpus Christi Rage in Texas, and it was an indoor football league that I got picked up at. And this had to been like 2017 or 2018. And now I was doing that for, call it a year and a half, almost 2 years, and then landed in Green Bay, Wisconsin at a point. I was in Green Bay, Wisconsin, playing for the Green Bay Blizzard, which we played in the Reg Center, which was directly across the street from the Packers Stadium. And I ended up tearing my my MCL, which was pretty rough. A guy ran like straight into my knee, one of my teammates. So I was in Green Bay. Arena football definitely is not super popular, so we do not make any money whatsoever. Like I was making a couple $100 a week. And, I was living in a hotel room the team was paying for that, which was cool. But, I just had a lot of time to think and figure out what I wanted to do next with my life. And, what the biggest thing, and this resonates with everybody, is, we all want to make money. Right. And I started learning about, I read Rich Dad, Poor Dad. I started learning about like investing and the stock market and things like that. When I came back to Atlanta, I hooked up with the cat out here that he does like a lot of foreign exchange trading. He was doing some cryptocurrency trading, and this was like before it was all super hyped up. And he helped teach me how to trade, derivative products and things like that. And then I just kept growing into it, and I figured, hey, if I'm going to spend this so much time on it, I might as well try to make a career out of it. And that's kind of how I landed at Northwestern in a very circular way, because I started here, but who would have thought that I'd land back here as well?
Wow. And so that's awesome that you share that, because in our paths in life, we never know how we may have to, and people say this, don't burn bridges, because you never know how you may have to go back to the bridge where you started, or even the bridge that helped you cross over to. So to hear that you were there in 2015 and now that you're back again, it means that you've had a great relationship so that you could go back. So let's unpack. You talked a little bit about what's in this segment today, insurance and also investing.
Okay.
And there are a few things I want to talk about. Why do you think most people have challenges when it comes to, we may have a great job, we may have a great salary, making good money. Some of us have no knowledge about 401k investment, let alone let's talk about the insurance piece of what you mentioned, of where we start. Why do you think so many individuals have challenges with taking the ownership by protecting themselves and having insurance? Why do you think there are so many challenges sometimes that people delay in being proactive and making sure that they're insured and covered?
Yeah, it's a great question, Sean. I think that a lot of it just has to do with, the education system isn't necessarily designed to make, well-functioning adults as much as it's designed to make well-functioning employees.
Can you say that again for us, please? Can you say what you just said? Because that was absolutely powerful. And I really want the audience to hear that again.
Yes. The school system, at least in our country, it's not designed to make people that are, really highly functioning adults. It is more designed to just kind of make you into an employee, which isn't necessarily a bad thing. I don't want to make that sound like a bad thing. But if there's knowledge that's going to kind of better your life, you need to seek it out, right? It's not going to be included in the curriculum, in your K through 12 curriculum. And even in your, in your higher level of education curriculum, they're not going to be teaching you about life insurance. They're not going to teach you about filing your taxes, credit scores, 401ks, saving, investing, things like that, unless you like seek it out and get a personal finance class, or you seek out mentorship and things of that nature. So I think that's probably the biggest issue there, is that we're not taught it, and there's no real incentive out there for it to be taught. And then secondly, I think as human beings, and this is probably more specifically as it pertains to insurance, is we're not really good at managing risk too well. I think we tend to overestimate the probability or the likelihood of good things happening and underestimate the probability or likelihood of bad things happening. That's why a lot of times when bad things happen, like, we kind of get caught with our pants down. And, we've seen this as a country. Even over these last 2 years with the pandemic, this was not an event by any means that we were prepared for. And we're still kind of dealing with those ramifications. So I think it's a combination of those two, just people not necessarily having the right information presented to them. and from an educational perspective, and then secondly, just our human biology working against us from making like logical and rational decisions.
Mhm. So would you recommend, for the listening audience, would you recommend an age to start protecting yourself with insurance, apart from just what your employer may provide? Would you recommend, what would be your recommendation for those that are seeking protection for insurance, and what age should they start at? Is there not an age at
Yeah.
all?
I mean, I would say with life insurance as soon as possible, right? So I'll get, and, I have multiple clients. We get life insurance policies on their kids. Uh, so that's something that legitimately every 6 months, your life insurance policy gets more expensive because by the insurance company standards, you just got older, right? So there's no real benefit in waiting or trying to time out the right time to get life insurance. It's really as soon as you can afford to get it, or someone can afford to get it on you, I would just go ahead and get it. Now, with some of the other insurances like disability coverage, I know that's something that usually you'll get through your employer. There's some circumstances where you'll want to supplement that coverage. Long-term care insurance, that's a new one. I know a lot of people will deal with families will deal with elders and their families that need care, whether that's a nursing home or a home health care facility, et cetera. And that's something that, you'd probably want to lock in, again, as soon as possible. But generally, I see families start thinking about it in their 40s, in that kind of range. But to answer your question, for in most scenarios, Sean, any insurance policies that require you to go through a health check or some sort of medical underwriting, it doesn't make sense to wait to get it because, one, you run the risk of not being able to get it, and then two, the policy is just going to get more expensive.
Well, I think you shared very beneficial information. So, guys, please be proactive in making sure that that part of your financial portfolio is intact. And that's one of the reasons I personally wanted to bring Rush on to share with everyone, because he is an expert in his field and he is someone that is well versed and very relatable. We're now going to move over into the investing piece. And I believe your muscles are very strong in this area of investing. And we have had recent conversations this year about all the inflation that's taking place in the market. And would you say it's safe or not so safe? Or you mentioned the word risk in the previous portion of our interview. Is it wise to invest in a volatile market?
Yeah, I think the biggest thing, Sean, is you just need to understand your time horizon. We all want to make money, right? That's just kind of, again, going back to biology, we're greedy by nature. We always want more. But at the end of the day, like if I put money into the market in January, and obviously the market has not done well to start the year off, then I just need to be able to measure my expectations around when I would be able to receive or take distributions from those investments, right? So if I put money into the market in January, the market goes down 3%, and I know it's going to take a 6% recovery just to get me back where I was, then, it just helps us kind of gauge out the timing on when we would want to be taking money out. And that's probably I just said the same thing twice, but it's really important to think about it that way. So that it makes sense that I'm kind of repeating myself. But I would say from an investment perspective, to answer your question, volatility isn't necessarily a bad thing. You just need to have a good framework within which you could say, hey, this money is for 5 years out, this money is for 10 years out, 15, 20, et cetera. And then secondly, if it's super short-term money and you're trading volatility, right? So a lot of price movement, then you really want to know what you're doing, right? You really want to make sure that how to both make money on the long and the short side, meaning you know how to make money when the market is going up and down. If that makes sense.
It does. And
Yeah.
so we've seen so many people, the billboards are everywhere on buses.